Optimism is high. The Nasdaq 100 at an all-time high, and chip stocks are leading the way. Deirdre Bosa joins us now for today's Tech Check. Dee.
Hey, Tyler. So common knowledge, tech obviously led the way last year. And after a rough start at the beginning of this year, it continues to keep that leadership. But let's dive into the different sectors. And you see that chip makers, by far and away, is the best performing sector within tech itself this year, but also over the last 5 years. Take a look at it versus the software ETF, an internet ETF, a tech ETF, and the NASDAQ itself. It has just been such an outperformer, up nearly 300% over the last 5 years. And when you look at where the gains have come from this year as well, it's pretty much all the chip makers. The only one of the Magnificent Seven that's sort of in the top percentile, the top performers of the S&P 500 is NVIDIA. But you've got other ones like Juniper, AMD, Palo Alto, Arista, Broadcom, et cetera, et cetera. Chip makers have just been a fantastic investment over the last 5 years, and it looks like this year they could lead the way again. Of course, at some point, valuations get stretched or there's opportunity elsewhere. But the idea that this generative AI shift, platform shift, is so big, and the need for chips, and especially high-end ones like GPUs, the ones that NVIDIA and that AMD is going to be making, is going to continue to fuel this rally. And some evidence of that was Zuckerberg's message yesterday when he basically said that he is just loading up on these GPUs and CPUs in order to develop their own large language models. It kind of gives investors an idea that this could continue to move.
Let's talk about on the one side, these companies investing heavily in AI. On the other side, they seem to be cutting jobs.
Yes. So those two ideas are not actually at odds with each other, because you have to think that more chips and smaller workforces, they actually go hand in hand. Because if you are shifting your business towards this, and we've talked about this, Tyler, this generative AI model, you're going to use those GPUs or other advanced chips to make your workforce more efficient. You may not need those junior engineers that can be replaced with generative AI. So you can be spending a lot more on the back end, on the chips, on the infrastructure, while actually cutting down your workforce. And I think that's what we've been seeing at Google. We've talked about their rounds of layoffs this year. And even Zuckerberg yesterday, he said that they're consolidating their AI teams. That could lead to layoffs as well.
Yeah, all right. Well, Deirdre, we'll keep an eye on it, right?